You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. It is yet another Rockin' Friday. Time to rock out with a little vol action. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the Options Insider Radio Network. Your home now for 19 plus years of options goodness. A good chunk of that with vol goodness as well. VolView has been running for quite a while here on the network, back when we launched it in the primordial ooze days of the Volatility Exchange. Good old Volex folks are what brought this to fruition, which is kind of wild. Been a long, fun run here on VolViews. We're enjoying it. Of course, if you want to keep it flowing to you, make sure you're checking out all of our sponsors who help bring you this fine, fettered content every week, including our friends over there at Tasty Trade, tastytrade.com/podcast. See what deals they have in store for you, the VolViews listener. They all love the VolViews listener. So make sure you're heading on over there. Tell them you heard about them on the old Options Insider Radio Network. Goes a long way towards keeping all this content flowing towards you. And if you want more content flowing to you after VolViews is done, theoptionsinsider.com/pro. We got some bangers in store for us on oddities. I was just looking at some of the numbers here right before VolViews. And man, some of these names we were talking about last week, up 50%. These are insane. Who needs AI? Who needs AI when you got the magic of some of these names, which is, again, kind of wild. Kind of wild what's going on. Check it out over there, theoptionsinsider.com/pro. That also gets you your name in the hat. You got pretty much 1 day left to get your name in the hat for the February Pro Trading Crate. Trust me, you want to win at least one of these things in your trading career, listeners, if for no other reason then it lets you mock our good buddy, the Rock Lobster, who is repeatedly angry at me that he is ineligible. So mock him, get on over there to the pro, and maybe you'll win a fabulous prize. As we go around the horn, you know, we all win when we have fun folks joining us on the old VolViews panel. First, we go out to the newly minted Vol Lake House. Yes, volatility comes in all shapes and sizes, including at a lake house near you, listeners, where we are joined once again by the once future and present Dr. VIX, a.k.a. Mr. Russell Rhoads. Mr. Rhoads, welcome back to the show. How go things in the Vol Lake House, sir?
It looks pretty out there, but I can only imagine the amount of shrinkage if I were to jump in the lake right now. It would be worse than a long volatility ETF.
Yes.
Just to make it on topic.
And that very tinny and explosively loud laugh.
All right, is that better?
Can only mean, turn it down a little bit. You must be blowing the eardrums out of your people on the pit chat throughout the week. Either that or they have like earmuffs on. I don't know. You are literally the only person who beams in every week who just knocks me out of my cheer if I was sitting.
Sorry about that, dude.
It's wild. I don't know what you're doing down there
right?
in the Vol Mecca. It's a little better, yeah. But yes, joining us from the Vol Mecca, known as Austin, also the home of The Undertaker, Mr. Sebastian's close personal friend. None other than the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, welcome back to the show. How goes your Adventures with The Undertaker podcast?
It's going great. He and I, we call it, his name is Mark in real life, so we call it Mark and Taker.
Mark and Taker, yes. There we go. Good stuff indeed. As we keep rolling into a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down all the Vol that was lighting up our tape this week and indeed today. And you know what? We're playing out kind of by the script now, listeners, which is, again, kind of interesting in the Vol space. Yet another uber red Friday, listeners. We are seeing the red once again, the bears baring their fangs out there today. That is on the heels, of course, of the tech wreckage that kind of cut the knees off the market yesterday. So we saw a pretty blood red Thursday. We had a lot of intraday vacillation, which has kind of become the norm a little bit on Thursdays now. And then the question becomes, how do we follow that up on Friday? And today we are following it up firmly in the red. So on the heels of Nvidia not really blowing the skirts off the market, even though they had a pretty good number out there. Today, of course, we had inflation coming in hotter than expected, and that's always going to spook some folks out there. And so we're seeing that spookage reflected in the market right now. S&P off 0.75% on top of the sell-off yesterday. We kind of rallied in the second half of the session after the option block yesterday, so we're kind of right back down to where we were on the option block again, vacillating around that 68.5 level in the S&P. Dow off 1.3%, so Dow leading the charge to the downside today, which is kind of interesting. And the Nasdaq off 1.15% out there after being down nearly 2% at one point yesterday. So a lot of interesting stuff. Again, yet another reason why you can't prep the data for vol views too far before showtime, because obviously those vol futures are bouncing all over the place. VIX itself is bouncing all over the place. So it makes it a fun challenge to find that snapshot. Right before the show, we had vol pretty much literally unched as we started firming up again. As the sell-off started intensifying, we are now seeing vol firming up. As we kicked off the show, it was up to about 20 3/4, which puts it up half a point from where we were this time last week. Again, not that dissimilar from where we were this time a week ago in the vol market. Our old pal Volley, Mr. Scott Nations, one of the participants in our recent vol death match. Check it out over there on the Pro. If you missed it, it is available there on the archives for you, the exclusive Pro podcast feed. It's a banger, trust me. You want to check that one out. 1665 is where Volley was when we kicked off the show. Up not quite a half a point, about 0.4 of a point. Remember, Volley is the just the facts, ma'am, straight at the money vol metric. And good old VIX at about a 110 when we kicked off the show, which puts it literally unched on the week. So again, kind of a wild week out there. I've been doing some fun experimenting. Maybe we'll get to that a little bit later in the show as well. But we've been talking about a lot of fun stuff here, a lot of ways to play with this market. We'll get to all that fun. Let's go out to the vol mecca first. Let's see if we can find the sweet spot for Mr. Sebastian, where he's not too hot, he's not too cold, he's Goldilocks just right. Mr. Meatball, what's your week been like? It's been a pretty wild week, sir. Catch us up.
Yeah, it really has been up and down. I would say the most interesting day was really Wednesday, because that was a flat out short squeeze of every asset they've been dumping. Bitcoin was up, software was up, private credit was up, The Mag 7 was up, and then that has been we've basically gone right back to it on Thursday and Friday. Mag 7 stink. Private credit down, Bitcoin down. What's been interesting though is that in the midst of this sell-off, equal weight. So you take the 11 sectors and you buy them equally at the beginning of the quarter. It hit a new all-time high yesterday. RSP, the ETF for equal weight, new all-time high yesterday, and it's only down. The market's down. Dow's down over like 1.3. The Nasdaq and the S&P are down like 0.7. RSP's down like 0.2% again. It has been really performing quite well in this market because, everything that's not tech has actually been pretty strong. Energy, industrials, until today, financials. Financials look awful. I don't know if you saw Goldman Sachs, but it is getting fist punched. Mark, you'll like this. So far on the day, 2,500 of the expiring today, the February 27th, 860 puts have been bought for like $5. They've thrown like almost $1.5 million at puts expiring in 3 hours.
Wow, $5.
So, yeah, my inclination is I think the afternoon is going to be ugly, and this would theoretically set up for the bad Thursday. If things get worse here, even worse Friday, freak out over the weekend, and sell on Monday, because despite everything, we're sitting right off new all-time highs. We are less than 2%, $120 away from the all-time high. So it's weird to be that close to an all-time high and be looking at a VIX that's near 21. And the firmness of the VIX paired with the rally in the bond market is an eyebrow raiser and has me worried that there's a big shoe about to drop. I am concerned.
That's interesting. What you mentioned earlier about the equal weight as well, because that just shows you the rotation is alive, right? The folks are going into those little tiny names out there that they have neglected.
Yeah, the tiny names of ExxonMobil and JP Morgan and
yes,
and
those little baby names that could use some help. You could use some help out there.
Well, the funny thing is when you and I were on the floor, and those were like Exxon was the biggest company in the world.
Those are the big dogs.
It was huge. They had to apologize for making so much money.
Yeah. Now you got AI companies haven't even gone public yet that have the valuation of Walmart almost. So yeah, we got wild stuff cooking out here as well. Interesting stuff. Of course, you're right. Kind of still hanging out near all-time highs, but if you just looked at the vol market by itself, or if you add in, as you mentioned, the flavor of the bond market with it, it does seem like people are spooked. Oh, Mark, you love a little bit of skullduggery. You were talking Bitcoin last week. Have you seen all this skullduggery about Jane Street and their algorithm that was apparently annihilating Bitcoin every day at 10 a.m.? And then they got sued, and lo and behold, Bitcoin rallied.
Yeah, and what look now what it's done over the last 2 days. It's gone right back to it. Right back over. Bitcoin is not going to bottom out. I know you do a crypto show, but MSTR has to blow up for crypto to find a floor. BMNR probably too. But so if you like crypto, buy puts on MSTR and go long the physical, because MSTR is not a good play. They own 10 billion. They've got $9 billion in convertible debt backed by crypto. If I'm Goldman and I really want to get my hands on some Bitcoin, I could go out in the marketplace, or I could force it lower and then put MSTR into receivership and take it, which is, I think, what's going to end up happening.
One might argue that's maybe what Jane Street was trying to do. Just keep driving down that Bitcoin price until MSTR has to unwind out there. Why wouldn't you want to buy a name that gives you levered Bitcoin at an underwater price mark? Why wouldn't you want that?
With some of the most irresponsible posts on X I've ever seen in my life. If your investment advisor looked at you and said, well, if it's not going to zero, it's going to $1 million, or sell it. I don't care if you need money. I don't care. Sell a kidney. Hang on to your Bitcoin. That is just absolutely ridiculous.
All right, Mr. Rhoads, same question for you, sir. It's obviously been a pretty wild week out there, but also, as we say that, kind of following along with the same trajectory we've seen recently of Little bit of weakness in the vol market first half of the week, second half of the week, usually Thursday, something happens, sells off equities, firms up vol, and then the question becomes, how does Friday play out? And today we're playing out red. What was catching your eye out there, sir?
I've got a funny one. I know we're not allowed to use technical analysis with VIX, but this week is the first week we didn't have a higher low for VIX on a weekly chart this year. We have been in a slow, steady uptrend with VIX. And with a move to 17, a short-term move to 1750, we just barely broke that support. But this is the first week that we didn't have a higher low. We've just been marching upward, and with that march upward, I think reflects the increased concerns that people have that the next shoe is going to drop. And there are some funky things going on in the bond market, like Mark Sebastian mentioned. If anything, the bond market is starting to slightly reflect that we may be getting a next round of inflation. And it's not showing up on a lot of people's radars right now. But typically, when we get one, we get another one. But typically, it's not just one. During the cycle, it's not just one move where we have some inflation. They try to put the genie back in the bottle, and then they've got to deal with it once again at some point. And we shall see if that's something that happens. It may be a reflection too of Warsh coming in and thinking that he's not going to be as concerned with inflation, and people are just positioning like that because we don't have a whole lot of clarity from that guy yet. But we also, as you said, we are following that pattern where we get a couple of spikes during the week, and then we come back to somewhat normal levels. Although above 20, I guess, I think above 20 is a normal level for as much potential risk as we have out there in the world.
Let's see what we have out there in the vol world right now. Let's look at the futures. Again, very much a moving target, listeners, whenever we run this segment. So we try to take as much of a representative snapshot as we can here on the show. And as we're coming into this portion of the show, obviously we are seeing vol firm up pretty much across the board. As we kicked off this segment, we had the March future up almost 1/4 of a point out there. So again, not that dissimilar from where it was this time last week. April ticking up about not even 0.2 of a point, about 0.17 out there. And we got the October future, which again, getting perilously close to that midterms out there. Actually up the most, up about 1/4 of a point. So we're seeing that kind of whole curve kind of lift right now. Of course, wait 5 minutes and these futures might be in a very different position. Mr. Rhoads, sir, anything catching your eye out there? Anything lurking in the VIX term structure this week, sir?
Well, kind of lurking. Let's welcome November to the game.
November has entered the chat.
Yeah, November has entered. There's an open interest of 5 contracts. It's at a nice 3-point premium to the spot right now. But why do we care about November? I don't bring up obscure stuff unless there's a reason, and it's the midterms, man. I don't know what the anticipation is right now. I haven't looked at the Kalshi odds since the State of the Union. The State of the Union was nothing more than a giant campaign ad, if you think about it, which I'm going to stop with the politics because I don't want to say anything that gets me in trouble. But I just that was definitely a spectacle. So you're starting to see the November contract. It's only at a 20-cent premium relative to October. It'll be interesting to see how it looks relative to December. When we get December, we have that normal December holiday effect that we always see. But November is the first contract it's the one that you would be playing if you're going to be playing the election. So even though there's only it's probably the only time that I've ever talked about. It has an open interest of 1 and a volume of 5 today. It's probably the only time ever that I talk about something that has single-digit open interest and single-digit volume. But it's something I'm going to be keeping an eye on, and I've got a dashboard thing that I've built that shows me Kalshi next to markets. And I'll put this one next to, do they keep the House? Do they lose the House? Do they lose both the House and the Senate? Do they, those types of odds, and see if November VIX is reacting to the anticipation of the outcome of the election in November.
Yeah, I have a feeling we'll be talking about that Nove cycle a lot more. I also have a feeling that OI will grow beyond the single digits that it is right now. Just a hunch. Call it a feeling out there. Mr. Meatball, same question for you, sir. You said you're kind of wondering if there's another shoe to drop out here. Are you seeing any signals emerging from the VIX futures this week, sir?
We have been kind of playing with backwardation in the curve several days in the last couple of weeks. We've managed to stay in some form of a contango just about every day. But, the curve is definitely showing what I call kind of confusion. You've got the index trading actually above the March future by just a tick. And then you have March, April, May, and June essentially on top of each other. The curve is very flat. That's another kind of harbinger of bad things. I was telling my traders, I'm like, when the curve gets this flat, this is either an inflection point to buy, and that's usually about, I don't know, Russell can probably tell you exactly how often you should buy when the curve flattens. But my guess is that's going to be right somewhere 70, 80% of the time. That's a good buy. Problem is that 20% of the time it is not a good buy. It is a very, 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 very bad buy. And the fact that we've been this flat for this long has me leaning toward, I think there's going to, I don't know where the flush is going to come from. Private credit, some of these smaller software companies are a real problem. But feels like it's going to be something from out of the Mag 7, like a big surprise, like a warning from one of them. Like, can you imagine what happens to the market if Apple warns?
That would cut the legs out from it pretty quick, I would think.
Yeah.
And by the way, can I just, on behalf of all Vol Views listeners, can I just thank you from the bottom of my heart for switching to that laptop? The other setup was killing everyone. Oh,
I am here.
It sounds glorious.
I am here to serve. I am here to serve.
This is the most beautiful sound I've ever heard in my life.
When Longo says jump, I say how high.
Oh my God. I was weeping internally there for the last couple of weeks. So much better. Oh, thank you. But I digress. Out to the land of VIX options we go, listeners. Is it a spicy day in VIX land? Yeah, we get some red on the screen, especially when you get that pause and you start to get that second leg down. That's usually when it seems to really start ginning up some action in VIX land, and we're starting to see that now. VIX already over 500,000 contracts today, 955. That ADV has come down. Remember, we were exactly at my threshold last week, listeners. I've always been saying 1 million contracts a day. When VIX is hitting that, you got to sit up and pay attention. We were exactly at 1 million. 1.0 million was the ADV last week. We have retreated off that, 916. Now, still a lot of paper. You still got to sit up and pay attention. But given today's volume and yesterday's volume, probably have a good chance of getting back to that 1 million level out there right now. Speaking of levels, how are we hanging out in our proprietary TM top 10 VIX options indicator? Well, we're hanging out with a few more puts making it into the top 10 this week. We're actually, dare I say it, at 7-3. Yes, there are 3 puts in our top 10. Let's see if we can suss them out. One of them is the return of an old favorite. I'm just going to give you a hint. But going out to March this time, I'm giving it all away. Let's just get into it. Cost you $1.69 to break into the top 10, literally 12 contracts below 170K. Let's just say 170K to break into the top 10 this week, listeners. That gets you to the March 22s. Not the wildest strike on the board. Number 9, this is the old friend I was talking about. Just when you thought people had heard the show enough and they heard our mockery of this option and this strike enough to stop trading these things, they make their way back into the top 10. At number 9, it's our old friend, the return of the March 15 puts, 171,000 of these bad boys. So if you wanted to play the 15 put game, like apparently some folks do, 171,000 of those bad boys, followed by number 8, 172,000 of the March 18 puts. So maybe you like those a little bit better. We've been talking about 18 puts for a while. They've been vacillating all over the place, 50-odd cents, 70-odd cents. So maybe you've taken a nibble on those. Number 7, $1.76 of the March 24s. Number 6, our final of our 3 puts in our top 10 this week, 192,000 of the March 16 puts. So a put medley in the top 10 this week, listeners. All we're missing is the 17s. We got a nice little strip there. Number 5, 195,000 of the, dare I say it, reasonable March 20s. Of course, if you buy those, though, got to be quick on the trigger finger. Number 4, 212,000 of the March 50s. Back up to the fun. Number 3, 234,000 of the April 80s. So if you like the 80s strike, but March wasn't getting done for you, how about number 3? The April 80s, listeners. And number 2 and number 1 are going to sound familiar. Number 2, 268,000 of the March 25s. And number 1, 297,000 of the March 35s. Once again, those two dominate in the top 10. But let's see what's dominating the weekly chart, shall we? It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, the floor is yours. Have at it, sir.
I just love that the floor is mine. Monday with VIX at 2151. Kind of a good trade here. Somebody sold 500 of the VIX February 25th 20 calls for $1.74, and they bought 1,000 of the 23 calls at 51 cents. So they sold 1, bought 2, did it a 72-cent credit. Trade makes money below 20, and settlement was 18.96. So this trade made the 72 cents. But if we had kept moving to the upside, if VIX had gone to 27, 28, 29, 30, something like that, we also would have seen if that move to the upside had continued through. I don't remember seeing, and I love this trade structure. It's probably my favorite trade structure for being set for long volatility, but I typically have looked at it when VIX is like 15, 16, 17 and hoping, but that little place in my mind that makes me go do quantitative work. I'm wondering if every time VIX crossed from under 20 to over 20, if you did one of these, where if we go back down, you make money, but if it continues on, you make money as well. If this 1x2 structure would make more sense.
I was just thinking the same thing. I was like, is 20 that sweet spot? We always talk about fading that, right? Maybe this is the better way to do that. I love the credit. The credit is nice. That's better than the ratio we talked about last week. I think they paid for it. And,
Yep.
If you still get that explosion that you're worried about, you're covered.
Yeah, it's almost like you've got your short volatility with an upside kicker. Although you've got that bad in between spot, but we tend to not stick in that in between spot. We hit the low 20s, we end up back in the teens, or we keep going within a day or two. So there may be something to that. All right, Tuesday, this was kind of interesting with VIX at 1962. We had somebody sell 3,000 of the February 25th 20 calls for 30 cents, and they bought the March 3rd 20 calls for $1.34. This is a roll. I'm starting to see this over and over again, but this was definitely a roll. And I'll get to they did something again later in the week with this one as well, so kind of remember it. Then with VIX at 1954, somebody sold, I like this trade, even though it looks kind of iffy right now. They sold 200 of the March 3rd 17 calls for $3.30. That was opening based on open interest. So basically VIX under 20 at settlement, this trade makes money. VIX under 17 at settlement, and they're absolutely thrilled. G.I. Joe with the Kung Fu grip time. Wednesday, with VIX at 1789, somebody sold the March 3rd 20 calls for 67 cents and bought the 25 calls for 25 cents. They took in a 42-cent credit, hoping that, again, settlement next week is under 20. And notice I haven't talked about any put buys yet. They weren't out there. On Wednesday with VIX at 1808, I kind of like this one as well, even though it's a bit opposite of what I've already talked about. It's a bit opposite of that 17 call sell. Somebody bought 600 of the March 3rd 16 calls at a price between 310 and 315. They were doing this when VIX was near the weekly lows, so I think they timed it relatively well. Maybe one of you guys can see what the bid on the March 3rd 16 calls is right now. I'll bet you it's above 3. And then on Wednesday with VIX at 1815, somebody sold 111 of the March 3rd 21 calls for 56 cents and bought the 40 calls for a nickel. They took in a credit of 51 cents on this. I feel like the way that VIX has behaved lately, and it seems to give you a couple of opportunities every week to put on a bearish trade on a spike, maybe a little bit more patience would have made sense on this. And when I say things like that, I am well aware that Monday morning quarterbacking is very easy. I am. So finally on Thursday, somebody bought some puts. They're not going to be happy about it, but with VIX at 1860, had a buyer of 1,600 of the March 3rd 17 puts for 7 cents. And then finally today, more rolling of those 20 calls. Somebody came in and sold 2,500 of the March 3rd 20 calls for $1.20, which is a little lower than what they were paid for earlier in the week. And they rolled out to the March 11th 20 calls at $1.79, so a 59-cent roll cost on that one. My assumption is that since next week is an employment week, they may have rolled this week. So I don't. So they are out there for all of next week and don't have to worry about rolling if things are kind of goofy on Monday or Tuesday.
I was going to say they're a little quick on the trigger finger with that one.
Yeah, I just wonder if it's kind of a reaction to what's going on in the market and excess concern about the weekend.
That can make sense. By the way, I checked down your calls for you. They are 421 bid right now. Do you want to hear the offer, or is it just too offensive to you?
$5.
$6.
Okay.
That's why these non-standard ones are just, even in VIX, listeners.
I know.
4 1/4 at $6 is what you're talking about for these options.
If you were short those and wanted to cover, oh my God, you would never trade it again.
No, you would never trade it again.
Make a market, guys.
Yeah.
Sibo, make a market. Do your job. Do your job. You have one job. Make markets. $1.75 is ridiculous.
Can you imagine if you were standing in the pit with the broker right in your face, Mark, and you made that market? What would their response be? Besides a fist to the face.
I'd say this isn't NDX.
Yeah. I
mean, is this the Russell 2000? Yeah. So yeah, I mean, that was like the classic Russell move. Yeah, we're not interested in that call at that price. Okay, broker comes back. Hey, I want to cross 3,000 of these. Oh no, we want half.
Yeah,
what?
Totally. Yeah, just to get out there and take the risk. I get it; it's a less liquid contract, but you could tighten that up a little bit. I think between $1 and 3/4 for this thing.
Yes, you could.
My God! All right, this is why these things don't trade, because you're putting out markets like that. But I digress. Let's go out now. Let's see what is trading this week, shall we? Like we said today, decently active in VIX land, a little over 500,000, 555,000 contracts. We'll see if this sell-off intensifies. We'll probably see that number continue to grow out there, probably get past that 1 million level we've been looking at for a while now. The big dog out there in VIX land today, 43,000 of the March 35s. It's this March 25-35. It's dominating the OI. It's been trading quite a bit. It's open and trading again today. 35,000 as well of the 25. So both those strikes pretty active. Number 3, 28,000 of the March 30s. All calls all the time today, listeners. Number 4, 26,000 of the March 50s. And number 5, if you want a little bit more duration, 23,000 of the April 30s. So been a while since we've seen that much activity at 30 and above in our top 5, but that's what we're seeing today. Kind of interesting. Yesterday, also kind of a banger. Also a day where we saw a lot of activity 30 and above. 1.12 million contracts on the tape. So yesterday was definitely the banger. Of course, we were feeling that post-Nvidia tech wreckage in the market, listeners, and that was being reflected in the VIX. The big dog yesterday was pretty spicy, 211,000. Once again, it's those March 35, so that has been the option du jour just about every day this week. Number 2, 109,000 of the May 35, so maybe if you like that 35 strike, but March not enough duration for you. Number 2, May 35s. By the way, if you're wondering what's a May 35 going for, all that duration, $1.37 was the average price yesterday. Number 3, 105,000 of the April 30. Again, 35 is just the strike. People can't get enough of it, listeners. 104,000 of those. I don't think they were rolling, even though it is definitely opening on the Mays and the Aprils. Number 5, 100,000. If you want even more duration and more upside, number 5, listeners, 100,000 exactly of the August 50s. If you're wondering, what's an August 50 go for? $1.08. And number 5, 40,000 of the March 18 puts. They've been trading pretty much every day as well. On Thursday, it was 61 cents. Wednesday, about 750,000 contracts. The big dog, this time not a 25 or a 35, was actually the 22s. The June 22s going up 123,000 times. That was opening flow, listeners. So an interesting little bit of duration. If you're wondering on those, $3.34 was the average price. Number 2, 75,000 on the March 27s. Number 3, 63,000 of the March 30s. Number 4, 34,000 of the March 16 half puts. And rounding out our top 5 on a decently active Wednesday, 34,000 of the March 20 puts. Tuesday, kind of the sleeper of the week. Not even 600,000 contracts, 595,000 contracts. On Tuesday, the big dog out there, 80,000 exactly of the AUG 47 halves. We've been talking about this for a while, that 47 half strike. It's been very popular for a long time, part of that ratio, and they have it open just about every month for size. Number 2, 34,000 of the March 20 puts. So talk about dropping off a cliff from 80,000 to 34,000 for number 2. Number 3, 22,000 of the May 25s. Number 4, 20,000 of the June 30s. And number 5, 20,000 of the June 19 puts. Looks like that was closing. Maybe somebody took off a risk reversal, in which case, looks like if they did that, they probably did it for about even money, which is kind of interesting because they did them both for about $1.99. And then Monday, 623,000 on the tape. The big dog on Monday, 34,000 of the March 17 puts. If you're wondering, 31 cents on Monday. And number 2, 25K of the April 25s. Number 3, 25,000 as well of the March 23s. Number 4, our old pals, the March 35s, also gone up about 25,000 times. And bringing up the rear on Monday, 23,000 of the March 30 calls. By the way, we were talking on Monday, we did a flash poll because you saw a lot of the May 24s going up that day for $2.76. We thought we'd ask you folks, are you down for those? You either buy them or sell them or trade them in a spread. And 60% of you wanted to just sell them outright. You said, I don't care. Sold to you, $2.76. Thanks for the cheese. And then 30% of you wanted to sell them in a spread. 10% wanted to buy them in a spread. Nobody wanted to straight out buy them. So nobody wanted to lay that much out for a May 24. Mr. Meatball, sir, a lot of interesting stuff lighting it up out here this week, including a lot of March upside. And the 35 strike is clearly our strike of the week. What was catching your eye out there, sir?
Yeah, I mean, Wednesday, toward the end of the day, we had a well-timed buyer of the March 27 calls. They picked up like 67,000 of them. And the other one that caught my eye was actually on Tuesday. A trader, it looks like a trader sold the August 22 calls 20,000 times to buy 80,000 of the 47.5 calls. That was 100,000 lot. It was done kind of in an interesting way. But that is a pretty, that's a pretty teethy back spread, and you need some real convexity explosion for that to pay you. But somebody put it on.
Yeah, they've been loving that ratio for a while. If you look out most months, there's a lot of size OI on that 47.5 strike, and it's usually part of this 1x4, 1x5 type ratio that they seem to love. And they've been doing it for, seems like over a year now. We've been talking about that. So somebody, you're right, has figured that out. Maybe it's against a credit portfolio somewhere else, but somebody likes that as their catastrophe hedge in the vol space out there. Let's see if there's any catastrophes unfolding in the world of levered or inverse vol. Shall we, listeners? Let's go out to everyone's beloved SVIX. And you know what? This one, we've been saying for a while, it's kind of dead money. It's been vacillating in this roughly 21 to, 22 and change, maybe 23 if you're lucky kind of range for the better part of this year so far. You had a few opportunities. If you were diligent, if you scooped it, you could override it. But it was not really that great, really, in either direction. Back down to about a little bit shy of the 21 level, 20.9. I know a lot of our pro members are kind of hoping for it to get back into the teens again. Then they can start blasting away on some puts. Not quite there again, 20.9. So just breaking through the 21 handle, today, off about half a point. That said, right before the show, it was almost literally unched again. So it's another one where I guess if you wanted to just override it every week, you've been doing all right. But, outside of that, it's really kind of been dead money. And then our beloved UVIX, it was 610 when we kicked off the show, which put it almost literally unched on the week. It was pretty much exactly where it has ticked up a little bit now, up to about 635. So it's up not even 0.15 pretty much on the week. So there we go. It's kind of flirting right around where it was this time a week ago. Mr. Rhoads, I know you've been playing with your weekend trade in inverse and levered vol for a while. What's catching your eye in both of these products this week, sir?
UVIX, it actually worked last weekend for 3 total cents. Woohoo! Better than it could have been. I'm still playing around with mixing it in with some sort of short volatility, where maybe it offsets some of the risk associated with those things. But it does what it's supposed to do if we get a nice volatility event over the weekend. I think it was a couple of weeks ago, it was last week. I executed early, and it didn't really make that much of a difference. We were up a bunch during the program, and then it came right back down. And my entry was only about a dime better than where it would have been if I had just waited till the end of the day. So playing around with it doesn't get you anywhere. And then over a long period of time, just trying to find different overnights, etc. Not finding a lot on the long side there either. But the pattern as long as the pattern that we have midweek, if you think that's going to continue, where we get a VIX spike once or twice a week, I could see buying on Monday morning, or finding some weakness on Monday, buying it and just leaving a good till cancel limit order out there, something along those lines, to see if you can take advantage of that.
You could have done pretty well if you were kind of deft on the trigger finger this week. I
Yeah.
have some thoughts on that, but before we get there, let's go out to the meatball. By the way, Mr. Mark, it's not just me. A lot of our chat is thanking you for switching setups. They're loving you right now. You're their hero right now, sir.
Love you all, guys. Of course,
Yeah.
I'm happy to.
Mark Sebastian, what I would do if I were you right now is I would do the Wayne's World thing when they ordered it at Makita's Donuts or whatever.
And
just start chopping your voice in and out. Yeah.
Yeah.
We don't have time for that crap.
No.
Go ahead.
These things have become pretty anemic. You would think there'd be a lot more interest in it right now, and there just kind of isn't. And I would have expected on a day like this to see some major VXX trading. Nothing. Biggest trade is 1,000 lot of the 30 calls. UVXY, it's up 7%, and there's stuff expiring today that's trading. That's about it. And UVIX, this is dead money until it actually trades. Biggest trade is they picked up. You'll like this, Russell. They've picked up 10,746 of the 5 puts for next Friday, paying 4 cents.
So the S&P is going to what, 7,500?
If that's going to pay, they're looking for the VIX to go right back. That in order for that to pay, you basically need the VIX back at 14.
Yeah, something like that.
Pretty nuts.
I think of anything like that that looks like it's very far fetched fundamental wise. I refer to those as risk manager trades. Somebody's got some short puts, and the risk manager says you got to hedge that it could go to zero, which we know it can't go to zero, but whatever.
Speaking of managing risk, Mr. Rhoads, we've been talking about ways and workshopping on the show here, different ways to manage UVIX. And so I've been kind of playing around with different ideas, just putting on small positions, nothing crazy, and seeing ways you could play with it and maybe babysit it during the week. Because obviously you want to have it on over the weekend. So actually last week I bought it after Vol Views. It got right around to the 6 handle. I was able to scoop it there as well. And then kind of watching it over the weekend, you're right, it didn't do a ton. My goal this time was not to let it go on Monday, but kind of see what you could do with it intra-week. We have been seeing this pattern play out, at least so far for a lot of this year, where you get, vol kind of gets clipped early in the week, and then usually Tuesday or Wednesday is kind of the nadir, and then something happens on Thursday to spark vol again, and you get popped back up, and then on Friday, usually vol is still kind of slightly elevated, or at least back to where it was at showtime the week ago, and you buy the UVIX for the weekend and you rinse and repeat, do the whole thing again. So I thought, well, what are some ways you can play with that? So I bought it over the weekend, let it ride on Monday. And then in Tuesday into Wednesday, it started doing the erosion game again. And I even caught myself saying, you know, I probably should even buy more down here or do something else. But what I ended up doing, I said, what are some ways you could maybe manage this? So I ended up overwriting a little bit above where I got in on UVIX, because thankfully that's one of the nice things about UVIX. There's always such a nice little premium to the upside call wing that if you do start feeling that erosion pain, you could overwrite it. And then at least that takes away most of that. And then worst case, what happened this week is where we get a little bit of a pop on Thursday and Friday, which we did. I'm getting called away. I'm still doing well on the trade. I'll have to rinse and repeat and probably buy some more UVIX this week and probably do it again. But I've been kind of workshopping that. It's obviously not ideal if you get the extreme vol pop on Thursday. And if I had had the courage of my convictions, I could have rode it down on Wednesday. But it seemed like they were really coming for it on Wednesday. It got down to about 5.5 or somewhere in that ballpark. And I thought at this point, let's do something to offset this. You don't want to lose. At one point, you were up about 10% on you've got up to about 660. When you're giving up about half a buck on it, you want to start looking at some ways to mitigate that. So that's kind of the way I've been playing it right now. It's kind of fun when it's at these levels. You can do that kind of thing, and it's not as wild as when UVIX is up at a 40 and it's whipsawing, 5 or 10 handles in a week. But it is kind of interesting. There is something there, Mr. Rhoads. I need to just kind of dial it in where the right strike level is, when to overwrite it, maybe to roll it once we start popping, because right now my UVIX is going to get called away, so I'll have to come in unless vol gets smoked in the second half of the session, which was my plan. I was hoping vol might spike, but it might drop again just so I wouldn't get called away and I could rinse and repeat and do it again. That was my plan anyway. So far, not working out. What are your thoughts, sir?
I tried, selling calls on weeks where we didn't have a spike in the middle of the week, which is really more common over the long term. You have to keep that in mind. I couldn't find a decent exit or a decent exit strategy with options that improved anything beyond the Friday to Monday thing. The one thing I haven't done that I would like to do is, if we are higher on Monday, maybe sell in a call that expires at the end of the week to see if I can improve on that. But that involves a little bit of extra work. I think I mentioned to you, I did mention to you in the text very, very early when we were just getting started. Something that popped in my mind was, do a weekly at the money bear put spread or bear call spread. Sorry, bear call spread. Sell the at the money call, buy something 2 or 3 points out of the money every Friday in conjunction with, or sell the at the money, buy something a little bit farther out of the money in conjunction with the long position in UVIX, take the UVIX off on Monday, and then just assume that it's going to be one of the 80% of weeks where the fund closes lower week over week, and maybe that improves things a bit, as long as you risk control your short part of it. Short, like an at the money. I mean, and again, I haven't even started doing the data on it, but my first run is going to be sell an at the money call on Friday afternoon that expires the following week. Buy the fund, but then also buy a farther out of the money call.
I was going to say, you got to buy something.
Get the stock back. So get the stock back if it pops.
Yeah.
But the thing is, you would hold that call spread all the way through expiration. You'd own the UVIX for the weekend and then the call spread through expiration. And I just wonder if, because not all of them, but a good number of the big upside moves out of UVIX have come up on weekends, and that would offset the losses on a consistent short strategy.
Yeah, that's the question. You probably do want to buy another call against it somewhere. That's what I was wrestling with this week.
No, I wouldn't.
The whole reason to have the UVIX on is to catch that really explosive moment. You don't want to give it all away. And
I've tested it as a covered call by itself. One strike up from at the money to give it a little bit of room to run, and it just ruins it, because basically the way you make money on this thing is you don't give in to the frustration and you stick with it for the 6 months that maybe you made a nickel and then you lost a nickel, and then one day you're going to get a double out.
That was my problem this week. I gave in to the frustration, even though I knew it was the weekly nadir and I shouldn't sell my calls. Like, you know what? I'm giving in to the frustration. That now I'm getting called away.
Yeah.
Mr. Mark, I know you've been snowballing this idea. Any ideas, sir?
Yeah, I mean, so the only downside issue, the only issue I would have with selling the call spread is because of the skew structure, so the curvature, the convexity of upside in UVIX, not getting a great credit selling the
you're not going to get much for it.
Call spread.
No, you got to go for like 3 strikes.
There's so much juice, and if you're going to 3 strikes, you're going to end up kind of, I think, kind of negating a bunch of the gain. So, because Russell had me inspired, I was thinking, could you do a back spread? Could you do this? And the answer was repeatedly no, because you're selling 170% volatility to buy 250. No thanks.
Yeah, that was the problem I ran into too, because I was thinking about how can I buy something else against this, and that completely destroys everything, because you're right, that skew is just too wild. So there we go, listeners.
Yeah, just one last thought on it. The only thing that has looked kind of good is owning VXX consistently and just shorting VX, and then buying UVIX for the weekends. That's the only thing that really has shown any kind of promise, and that didn't work particularly well over a period of time recently, just because of the choppiness. But
you could do something fun like buy the stock, sell the 5.5 call at $1, and then buy the 7 calls twice for 39 cents, something like that. Maybe, that would give you kind of the downside protection. And then if it takes off, you have the up. Just a thought.
There you go, listeners. In ancient times, they struggled with the riddle of the Sphinx. We struggle with the riddle of UVIX. Maybe you have the solution. Hit us up. Let us know as we keep on rolling and go into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. As we're coming into the end of the show, we're seeing markets and vol not that dissimilar from where we were to start the show. S&P off about 0.8%, Dow off 1.25%, Nasdaq also off about 1.25%, and VIX cash not that far away from where we were at 20 3/4 to kick off the show. We're at about 20.82 here to end the show, so not that dissimilar. It's about almost exactly half a point from where I am at a 20.37. Russell, or I should say Gretchen, was feeling a lot lower at 18.43. He was looking good earlier in the week. I think we were all looking good yet again. I don't know if we kissed the meatballs level, though. The meatball was at 22.22. I don't think we got there in the cash this week. I don't think we kissed it. Got 21 and 74 today and kissed that level again on Monday, but not quite there. So it looks like I was the closest, such as it was this week, with about a half a point, but not enough for our margin of victory. So tell you what, I will go first, give everybody else a minute to collect their thoughts out here. Again, we're feeling spicy. I was over the 20 handle last week. I don't feel that bad about going over the 20 handle again this week. Again, the question is, how long can we maintain that, right? That's been the ongoing challenge for VIX for quite some time. I'm going to say, you know what? I'm going to say a little bit spicier than last week. I'm going to say 20.65. Also not that dissimilar from where we're hanging out right now in VIX cash. All right. Who was next closest? I guess it was Mark. So Mark, you get to go next, sir. What are you feeling for vol this time next week?
All my Chicagoland people, I'm going to Glenn Lerner again. I'm going 2-2-2-2.
Oh, keeping it in. One of these days you got to be right?
Indeed.
You were looking decent this morning until you weren't, sir.
I thought we might get there if there was some follow through, and we did not. I might be right by the end of the day.
I was going to say, watch, we take that second leg down today, and we'll be right up there. That's what always seems to do it. The second leg down is what really just spooks people and breaks, then we run. So yeah, second we turn off the mics, we will be at 22. So look forward to that. And Mr. Rhoads, what's Gretchen got in store for us this week?
Great. And I added another automated one. Gretchen is saying 2049. So I decided to ask ChatGPT, where will VIX be?
Oh, no.
And you know what the answer? It's going to be right, because it said somewhere between 16 and 22.
Oh my God.
Completely unhelpful.
That's worse than that March 3rd 16 call market. Jeez. Grow up here, ChatGPT. Jeez. Wow.
Man up.
What a What a courageous market by our AI overlords. And you know what? You could tell them I said that. Take that to the bank. Bot overlords. The queen right now is feeling spicy. 23.45, so she's above all of us.
I hope she's right.
We got some 20. Oh, Frank, what are you doing, Frank? You're coming right at me again. Frank, you and I have to talk. Maybe we'll talk during options oddities. But a lot of 20 handles. I'm seeing a lot of 20 handles. 21.95 by Mr. OG. So everyone's got a 20 handle now. So everyone's feeling some spice. Interesting. And Mr. Meatball, if they want to learn what to do in periods where there's a little spice in the market, or maybe when there's not, where should they go? What should they do?
Yeah, come check us out at optionpit.com, or follow me on Twitter at optionpit, and find us on YouTube. We're putting stuff out there every single day.
You too can be blasted out of your chair by the loudest sound you will ever hear, listeners. Optionpit.com if you want to hear that for yourselves out there. Mr. Rhoads, where should they go if they want more Rhodesian goodness in their lives?
Just anything I do, I put out there on the Twitter. My full name, RUSSELLRHOADS. I've been doing some more academically oriented videos with the professor from Purdue, and we have started interviewing old floor traders. And the Mark Sebastian episode, if you want to learn about baby Mark Sebastian when he started out in trading, and how he got spurred back in the day. It's at Academic Market Insights, where we have an interview with him.
We all want to learn about baby Mark Sebastian.
We want to know about baby Mark the trader.
Check it out, listeners. Wherever you find Mr. Rhoads' goodness, including 2 S's, 2 L's, RHODS. And of course, while you're checking things out online, make sure you're checking out our friends over there at Tasty Trade, tastytrade.com/podcasts. One of the many reasons why we can keep bringing you this show week after week. That is going to do it for us on Vol Views this week. If you're hanging out in the pro, stay tuned. We got a whole bunch of fun coming at you on oddities, some names that were bangers. Maybe we'll talk a little bit more about that UVIX fun, a bunch of other good trades. I know you folks probably had a good time in hymns and a bunch of other things this week. A lot of stuff popping off this week. Mara, we'll get to all of that fun. If you want to check it out for yourselves, theoptionsinsider.com/pro. Pretty much the last day you can get in to get your name in the hat for the February Pro Trading Crate. Then we're back again for everybody after the closing bell, breaking down another wild day in the options market with the Hot Options Report. Then we're back again with all of our fun content throughout the week. Yet another reason why you should be subscribed to the full network, listeners, wherever you get your favorite podcasts. They get you Option Block, they get you the Crypto Rundown, they get you, of course, the Futures Rundown, they get you Options Boot Camp, everyone's favorite Options Boot Camp. All sorts of fun this week in Futures Options. And then we're back again next Friday, another episode, Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.